어서오세요. 어서오세요, 어서오세요. 비트는 살아있습니다. 비트는 살아있고, 이더가 죽었네요. 이거, 뭔가, 익절해야 될 것 같기도 하고, 뭔가, 대응 잘해야 될 것 같긴 한데, 이더 좀 소액으로 타볼게요. 좀 눌러주면. 일단 반익해야겠다, 나도. 반익하고, 이 손절이 너무 긴데. 좀만 더 눌러주면 안 되나? 일단 손절 칼같이 걸어 놓을게요, 이거. 올라가려면 이거 안 깨고 올려야 되거든요. 이 로스는 아주 피곤해. 비트는 로스 한 19250. 이 정도는 먹어도 돼. 이거 50개 갖고 있었는데 50개. 이거 얼마냐, 이거? 너무 아깝다. 이 돈 너무 아깝네요. 일단 생각한 대로 그냥 우리가 처음에 생각한 대로 잘 가지고 있는 것 같은데 아직 모릅니다. 3분 남았다. 3분. 눌림까지 정확했죠? 완벽했지. 이거 근데 진짜 이쁘게 너무 원하는 대로 잘 가줘서 땡큐. 답지 너무 좋았죠, 이번에? 완벽했지? 올라주면 딱인데. 봅시다 한번. 내일 꼽았다가 갈 수도 있거든요. 이거 바로 쏠 수도 있고. 근데 이때까지 단 한 번도 FOMC 하면서 제 기억에 원웨이로 쏜 적이 없거든요. 진짜 이랬었던 기억이 난단 말이죠. 제가 봤을 때 제 비트는 살 것 같은데 이더가 살 수 있을지 잘 모르겠어요. 간다 했지. 너무 좋았지. 아, 이더 정리하고 가볼까? 나중에 주인 보고. 아이, 손절 좀 나가면 어때? 이더 정리하고 마음 편하게 보자. 그래, 가라. 와, 장난하는 것도 아니고 미친 거 아니야 이거? 아니, 미친 거 아니야 이거? 쌌다. 왜, 얼만데? 얼마 따왔는데? 3.25. 터졌다. 비트 터졌다. 이도 손절 나온 거 봐봐. 인생. 전쟁을 시작해보지. 저 단 한 번도 원웨이로 간 적이 없어요. FOMC 금리 결정하고 나서. 아, 이더 걸지 말걸. 개멍청하네. 좀 보자. 찍었대. 786 살짝 안 찍었네. 본절이 나갔다. 아니 나는 손절 걸어놓기 300불 나갔는데 10개인데? 미친 거 아니야 이거? 어이가 없는데? 밀려 체결된 거 맞죠? 10개인데 300개면 거의 바닥에서 손절 나온 것 같은데? 어떻게 된 건데 이거? (1328) 아니, 어디서 손절 나가면 300불이 나갈 수 있는 거지? 아, 이해가 안 되는데? 그럴 수도 있는데 그냥 뭐 렉 걸려가지고 그냥 어이가 없네. 잘걸. 연락이 벌어놨더만 돈 다 없어진다. 익절은 또 기가 막히게 잘 나갔다. 1328. 아니 어떻게 여기서 나가냐고. 내가 손절 여기다 걸어놨는데. 진짜 싸가지 없다 그죠? 점도표 혹시 보신 분? (75bp) 올렸는데 왜 지금 이렇게 난리치고 있는 거지? 좀 안정이 돼야 뭐 잡지. 뭐 지금 잡았다가 (10만 개) 입금됐다. 뭐 10만 개 던졌을 수도 있고 뭐 그거는 봐야 되겠죠? 그렇게 나쁜가? 잘 모르겠는데 아직까지. 야, 2만 불까지 올렸어? 익절도 못하고 이거 78불 먹었네? 이래서 사실 FOMC 이럴 때는 매매 안 하는 게 좋아요. 진짜로. 이거 다 먼저 나갔겠다. 위아래 다 터졌겠다. 아씨, 짜증이 나네. 로스 밀린 거 좀 어이없긴 하죠. 로스는 장난 아니었어. 저 진짜 장난 아니에요. 1328이면 여기서 터졌어. 바닥에서. 로스가. 좀 내려오면 18,900 정도 오면 타보고 싶은데. 근데 이거 올리면 숏을 타야 될지 롱을 타야 될지 모르겠어. $4,700불? 와. 알트 교차들이 밀렸구나. 너도 100불 나갔어? 아씨, 연락이 버려놨더만. 처음하러 왔네. 빨리 잘 걸, 그냥. 이럴 거. 그냥 출근하고 잘 걸. 뭔 개고생을. 나도 20K 쇼시에 지정가 하나 때려 놓을 걸. 돈 싹 복사했을 텐데. 알람 울리고 보니까 그렇더라고. 혹시 여기 숏 걸어놓은 사람 다 청산 다 났겠는데? 난리 났겠다. 저 사실 재미로 걸어놓긴 했거든요. 886에다가. 근데 886 최근 안 시켜줬네. 886 먹었어. 바로 먹었는데, 이거. 반줄 미친 것 같은데요? DX가 개떡상했다. 내일 1400원 보겠다 우리. 여기서 포지션 못 잡겠다. 우리 그 구경이나 하죠. 193 괜찮은데? 이게 다시 오를 수도 있어. 다시 오를 수도 있는데 그냥 지금은 뭐 들어갔다가 내질 것 같은데요? 지금 뭐 하면 안 될 것 같아요. 달러 완전 미치어 날뛰고 있는데? 아, 3파 올라갈 것 같은 느낌인데요. 이거 3파 죽인 것 같은데? 1파, 2파, 3파. 저도 75면 오를 줄 알았는데 왜 뭐가 지금 문제인 거지? 점도표 보고 싶은데 점도표 보신 분 카톡에 올려주시면 아주 감사하겠습니다. 점도표 보신 분? 근데 이게 그러니까요. 일절할 그럼 렉 걸려서 뭐 보지도 못했어. 그냥 보니까 시드가 없길래 왜 없냐 이렇게 그러고 봤던 거지. 십 분 뒤에 이제 우리 파월 형 연설할 거거든요. 다시 알트 교차를 한다. 이런 이슈 있는 날에는 좀 힘들 것 같아요. 확실히 너무 아파가지고. 30분 연설이 더 큰 영향을 미치겠죠? 반등을 시게 주거나 고갱을 할 수 있을 만한 명분을 만들어 주거나 좀 좋은 이야기를 해주면은 괜찮지 않을까 싶긴 하거든요. 백분만 더 올려주면 안 되나? 뭔가 오르면 쇼 쳐야 될 것 같은 그런 느낌도 들기도 하고. 와, 카운팅 어째 되노 이거. 항상 이럴 때가 진짜 노답이죠. 어지러운 카운팅. 이런 무빙은 어떻게 카운팅을 해야 될지 전혀 모르겠다. 이 정도는 와줄 것 같은데 왜 안 오냐? 일단 저 물 좀 넣을게요. 또 파월 딱 인사하는 순간에 진짜 빠질 수도 있거든요. 조심해야 돼. 리플 왜요? 이렇게 떡상하는 건가? 와, 이건 못돼. 아, 근데 얘는 뭔가 호재가 있긴 있나 보다, 진짜 확실히. 이렇게 가는 거. 안 그럴 것 같은데? 좀 매파적으로 할 것 같긴 한데. 일단은 단기적으로 급락이 좀 컸으니까 반등은 한 3% 정도까지는 반등 나오지 싶긴 한데 확실히 못 올리네요, 너무. (3,300만) 먹자. 아, 오늘 완벽한 날이었는데 이 무비만 아니면 진짜 완벽한데. 아, 진짜 아까워. 진짜 완전 오늘 답지대로 움직여줬는데 손절 300불 나간 거 개 어이없고. 비트 그러면 얼마 본 거지? 수익을? 만약에 익절을 위해서 2만 불에서 익절을 했다 그러면 얼마죠? 평단 여기였으니까 19172에서 한 개만 갖고 있었잖아. 와, 이거를 800불짜리를 70불 먹고 나왔다고? 으씨, 미친 거 아니야? 어이없네. 야, 이게 제일 어이없다, 씨. 아무리 봐도. 이 쥐똥만 갖고 있어 보자. 아, 나 분명히 여기 막 4,000불 찍히고 이런 보고 잤는데. 쥐똥의 힘을 보여줘. 아, 이 빚만 먹었어도 진짜 개꿀인데, 그죠? 완벽했는데. 이렇게 내릴 거라고 생각도 못했다. 자, 우리 3분 남았습니다. 패드워치. 아, 패드워치래. 우리 파울형. 지금 38이 좀 찍은 것 같은데? 38이 지금 찍었다. 이어 지금 반등했나 혹시? 알트 사야 되나? 아, 이건 알트를 잡았어야 되는데 비트를 잡을 게 아니고. 이더는 거의 없을 것 같고 반등. 아, 짜증나네. 우리 20K 혹시 쫓아본 사람 없나요? 진짜로? 아, 궁금해서 그래. 진짜 없나? 아, 그냥 뭔가 전부 다 ABC, 지금 C 플러스 올라가는 그런 무빙이거든요? 알트들이? 모르겠다. 그래도, 아, 여기 밤에, 이 새벽에 또, 이 방송 봐주시고, 또. 일단 위에 이거 추세 뚫으면은, 좀 봅시다. 추세 뚫고, 아니, 다시 눌러줄 때, 여기서 뭐, 파월이 이야기하는 거 어떻게 이야기하는지 들어보고, 좀 괜찮다, 좀 시장 달랜다 싶으면, 눌림에 롱 받아봐도 되지 않을까 싶습니다. 아니면은, 뭐, 반등 줄 때 숏 치던지. 10초.
감사합니다. 그리고 구독, 좋아요, 알람 설정 눌러주시면 이제 다음 파월 연설도 같이 해서 우리 앞으로 5년, 10년 뒤에는 다 같이 좀 돈 좀 들고서
나오는 것 등장만으로도 나락을 보내버리는 그런 생각이 들긴 한다. 눌리면 알트 사야 되나? 19.5에 숏 잡았어요. 19.5에? 잘 잡았네. 잘하셨네요. 이거 레콜에서 어떻게 잡았대? 100일에 노스 터졌다고? 다른 거래소 쓰시는구나. 반에는 좀 더 많이 터졌겠죠, 스키징이? 아, 이거를 예측할 수 없었겠지. 우리가 어떤 파동으로 봐도 이거는 예측하기 힘들었겠죠. 2만 불까지 오를 수 있다라고 생각하는 거는. 2만 불에 뭐가 있나? 매물대나 이런 게 있나? 아, 있네. 네, 19950에다가 숏 쳐놨으면 대박이었겠네. 아깝다.
Put growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports. As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust, with employee employment rising by an average of 378,000 jobs per month over the last 3 months. The labor market continues to be out of balance, with demand for workers substantially exceeding the supply of available workers. The labor force participation rate showed a welcome uptick in August, but has little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing the upward pressure on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.4% at the end of next year, a half percentage point higher than in the June projections. Over the next 3 years, the median unemployment rate runs above the median estimate of its longer-run normal level. Inflation remains well above our 2% longer-run goal. Over the 12 months ending in July, total PCE prices rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In August, the 12-month change in the consumer price index was 8.3%, and the change in the core CPI was 6.3%. Price pressures remain evident across a broad range of goods and services.
지통의 힘이 대단해.
Although gasoline prices have turned down in recent months, they remain well above year-earlier levels, in part reflecting Russia's war against Ukraine, which has boosted prices for energy and food and has created additional upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.4% this year and falls to 2.8% next year, 2.3% in 2024, and 2% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched.
와,
The Fed's monetary policy actions are guided by
뭔데 이거 장난하는 것 같네. 0.5 해가지고 지금.
and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
지금 그냥 상황만 이야기해주고 있거든요. 다른 이야기 하나도 없고.
Poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, bringing the target range to 3 to 3.25%. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and the evolving outlook for the economy. With today's action, we have raised interest rates by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year, 1 percentage point higher than projected in June.
이 점도표 아까 우리 봤었죠? 그 점도표입니다.
0.6% at the end of next year and declines to 2.9% by the end of 2025, still above the median estimate of its longer-run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth, and there will very likely be some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We will keep at it until we're confident the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Hi, Chair Powell. Thank you for taking our questions. Gina Smiley from the New York Times. I wonder if you could give us a little detail around how you'll know when to slow down these rate increases and how you'll eventually know when to stop.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%. And we will keep at it until the job is done. So the way we're thinking about this is the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular, to achieve a period of growth below trend and also some softening in labor market conditions to foster a better balance between.
잡을 만한 게 없다.
So on the first, committee's
너무 많이
forecasts
올라가지고.
of most outside forecasters do show growth running below its longer run potential this year and next year. On the second, though, so far there's only modest evidence that the labor market is cooling off. Job openings are down a bit. As you know, quits are off their all-time highs. There's some signs that some wage measures may be flattening out but not moving up. Payroll gains have moderated but not much. And in light of the high inflation we're seeing, we think we'll need to, and in light of what I just said, we think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time. So what will we be looking at, I guess, is your question. So we'll be looking at a few things. First, we'll want to see growth continuing to run below trend. We'll want to see movements in the labor market showing a return to a better balance between supply and demand. And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%.
대차 대표 축소는 원래 하던 대로 한다고 했어요. 원래 하던 대로 한다고 했고.
In terms of reducing rates, I think we'd want to be very confident that inflation is moving back down to 2% before we would consider that.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Can you talk about how you factor in the variable lags on inflation and the extent to which the outlook for rates should be seen as linear in the sense that you keep raising rates, or can you envision a time when there's a pause to kind of look at what has been wrought in the economy from the rate increases? Thank you.
Sure. So, of course, monetary policy does famously work with long and variable lags. The way I think of it is our policy decisions affect financial conditions immediately. In fact, financial conditions have usually been affected well before we actually announce our decisions. Then
이거 질문이
conditions begin to affect
상승 반전 돌릴 것
economic
같은데.
activity fairly quickly within a few months. But it's likely to take some time to see the full effects of changing financial conditions on inflation. So we are very much mindful for that. And that's why I noted in my opening remarks that at some point as the stance of policy tightens further, it will become appropriate to slow the pace of rate hikes while we assess how our cumulative policy adjustments are affecting the economy and inflation. So that's how we think about that. Your second question, sorry, was?
Is there a point in time you can see pausing? Is it linear that you keep raising rates, or is there? Oh, I'm sorry. I should know better than to not talk with my microphone.
I should know better than to answer your second question.
웃어?
Oh, there you go. Is it linear? Do you keep raising rates, or is there a pause that you could envision where you kind of figure out what has happened to the economy and give time to catch up in the real economy, the rate increase time to catch
그냥
up?
애들 소액으로 한 번씩 들어가
So
볼게요.
I think it's very hard to say with precise certainty the way this is going to unfold. As I mentioned, what we think we need to do and should do is to move our policy rate to a restrictive level that's restrictive enough to bring inflation down to 2%, where we have confidence of that. And what you see in the SEP numbers is people's views as of as of today, as of this meeting, as to the kind of levels that will be appropriate. Now, those will evolve over time, and I think we'll just have
번
to
거니까
see
한번
how
해보자.
that goes. There is a
올라왔다
possibility,
생각하고.
certainly, that we would go to a certain level that we're confident in and stay there for a time. But we're not at that level. Clearly today, we've just moved, I think, probably to the very lowest level of what might be restrictive. And certainly in my view and in the view of the committee, there's a ways to go.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. The projections show the unemployment rate rising to 4.4% next year. And historically, that kind of rise in the unemployment rate would typically bring a recession with it. Should we interpret that to mean no soft landing? And is that kind of rise necessary to get inflation down?
Right. So you're right. In the SEP, there is what I would characterize as a relatively modest increase in the unemployment rate from a historical perspective, given the expected decline in inflation. Now, why is that? So really, that is what we generally expect, because we see the current situation as outside of historical experience in a number of ways, and I'll mention a couple of those. First, and you know these, but first, job openings are incredibly high relative to the number of people looking for work. It's plausible, I'll say, that job openings could come down significantly, and they need to, without as much of an increase in unemployment as has happened in earlier historical episodes. So that's one thing. In addition, in this cycle, longer run inflation expectations have generally been fairly well anchored. And as I've said, there's no basis for complacency there, but to the extent that continues to be the case, that should make it easier to restore price stability. And I guess the third thing I would point to that's different this time is that part of this inflation is caused by this series of supply shocks that we've had, beginning with the pandemic and really with the reopening of the economy, and more recently amplified and added to by Russia's invasion of Ukraine, have all contributed to the sharp increase in inflation. So these are the kinds of events that are not really seen in prior business cycles. And in principle, if those things start to get better, and we do see some evidence of the beginnings of that, it's not much more than that, but it's good to see that. For example, commodity prices look like they may have peaked for now. Supply chain disruptions are beginning to resolve. Those developments, if sustained, could help ease the pressures on inflation. So let me just say, how much these factors will turn out to really matter in this sequence of events, it remains to be seen. We have always understood that restoring price stability while achieving a relatively modest decline, or rather increase in unemployment, and a soft landing would be very challenging. And we don't know. No one knows whether this process will lead to a recession, or if so, how significant that recession would be. That's going to depend on how quickly wage and price inflation pressures come down, whether expectations remain anchored, and whether, also, do we get more labor supply, which would help as well. In addition, the chances of a soft landing are likely to diminish to the extent that policy needs to be more restrictive or restrictive for longer. Nonetheless, we're committed to getting inflation back down to 2%, because we think that a failure to restore price stability would mean far greater pain later on.
Are vacancies still at the top of your list in terms of understanding the labor market and how much room there is there?
Yes, vacancies are still almost 2-to-1 ratio to unemployed people. That and quits are really very good ways to look at how tight the labor market is and how different it is from other cycles, where generally the unemployment rate itself is the single best indicator. We think those things have for quite a time now really added value in terms of understanding where the labor market is.
Nick Timmeros of the Wall Street Journal. You said not too long ago, in describing the policy destination, there's still a way to go. But I imagine you have to have some idea about how you're thinking about your destination, whether it's a stopping point or a pausing point. And so I was wondering if you could discuss how you are thinking about, as the data come in, where that destination is, how it's moving up if inflation doesn't perform as you expect. Do you want to have a policy rate that's above the underlying inflation rate, for example? And do you have an estimate for where you think the underlying inflation rate might be in the economy right now?
Well, so again, we believe that we need to raise our policy stance overall to a level that is restrictive, and by that I mean is meaningfully putting meaningful downward pressure on inflation. That's what we need to see in the stance of policy. We also know that there are long and variable lengths, particularly as they relate to inflation. So it's a challenging assessment. So what do you look at? You look at broader financial conditions, as you know. You look at where rates are, real and nominal in some cases. You look at credit spreads. You look at financial conditions indexes. We also, I would think, and you see this this is something we talked about today in the meeting, and talk about in all of our meetings, and you see this, I think, in the committee forecast. You want to be at a place where real rates are positive across the entire yield curve, and I think that would be the case if you look at the numbers that we're writing down, and think about you measure those against some sort of forward-looking assessment of inflation expectations. I think you would see at that time you'd see positive real rates across the yield curve, and that is also an important consideration.
Hi, Howard Schneider with Reuters. Thanks for the opportunity. I just want to be clear on the steps. You say it's meeting by meeting, but it sure looks like we're going 75, 50, 25.
비트 어디 갔노?
75 next month, the baseline.
So we make one decision per meeting, and the meeting decision we made today was to raise the federal funds rate by 75. You're right that the median for the year end suggests another 125 basis points in rate increases. But there's another fairly large group that saw 100 basis points addition to where we are today. So that would be 25 basis points less. So, we're going to make that decision at the meeting. We didn't make that decision today. We didn't vote on that. I would say that, we're committed to getting to a restrictive level of for the federal funds rate and getting there pretty quickly. And that's what we're thinking about.
So just as a follow-up to that, I'm wondering about the sort of risk management considerations here, given there's some discussion now of overdoing it. What's the incentive to continue front-loading right now? Is it lack of progress on inflation seen in the CPI reports, or is it a motivation to get as much done while the job market is still as strong as it is?
So what we've seen is our expectation has been that we would begin to see inflation come down, partly because of supply side healing. By now, we would have thought that we would have seen some of that. We haven't. We have seen some supply side healing, but inflation has not really come down. If you look at core PCE inflation, which is a good measure of where inflation is running now, if you look at it on a 3, 6, and 12-month trailing annualized basis, you'll see that inflation is at 4.8%, 4.5%, and 4.8%. So that's a pretty good summary of where we are with inflation, and that's not where we expected or wanted to be. So what that tells us is that we need to continue, and we can keep doing these, and we did today do another large increase as we approach the level that we think we need to get to. And we're still discovering what that level is, but people are writing that down in their SEP where they think policy needs to be. So that's how we're thinking about it.
Chair Powell, how should we interpret the fact that inflation is still not forecast in the SEP to be back to target in 2025, and yet the dot plot projects cuts as early as 2024? And does that mean there's a level of inflation above the 2% target that the Fed is willing to tolerate?
So I guess core is at 2.1 in 2025, and in the median, and headline is at 2.0. So that's
안 될 것 같아요. 쇼트라이 안 하시는 게 좋지 않을까
We write
싶은데.
down our forecasts and we figure out what the median is and we publish it. So it's not. I would say that if the economy followed this path,
여기?
this would be a pretty good outcome. But you're right, it is a tenth higher than 2%.
Okay, just as a quick follow-up, I mean, if the concern is that underlying inflation is becoming more entrenched perhaps each month, then why forego the more aggressive 100 basis point increase today? And does that risk having to do more later on?
Yeah, so we, as we said, you know, at the last press conference and in between that one and this one, we said that we would make our decision based on the overall data coming in. So if you remember, we got a surprisingly low reading in July, and then a surprisingly high reading for August. So I think you have to, you can't really, you never want to overreact too much to any one data point. So if you look at them together, and as I just mentioned, if you really look at this year's inflation, 3, 6, and 12-month trailing, you see inflation is running too high. It's running 4.5% or above. You don't need to know much more than that. If that's the one thing you know that this committee is committed to getting to a meaningfully restrictive stance of policy and staying there until we feel confident that inflation is coming down. That's how we think about it.
Hi, Victoria Guido with Politico. I wanted to ask about the balance sheet. You all have left open the possibility that you might sell mortgage-backed securities, but we've seen significant slowing in the housing market. Mortgage rates have gone up significantly, and I'm just wondering whether conditions there might affect your plans for how quickly you have the runoff on the MBS side.
So what we said, as you know, was that we would consider that once balance sheet runoff is well underway. I would say it's not something we're considering right now, and not something I expect to be considering in the near term. It's just it's something I think we will turn to, but the time for turning to it has not come and is not close.
Well, and will conditions in the housing market affect that decision?
I think a number of things might affect that decision, but the main thing is we're not considering that decision, and I don't expect that we will anytime soon.
기대가 되면 그에 대한 선택을 볼 수 있겠지만
Neil Irwin with Axios. A number of commentators have come to the view, and including the World Bank, that simultaneous global tightening around the world creates a risk of a global recession that's worse than is necessary to bring inflation down. How do you see that risk? How do you think of coordination with your fellow central bankers? And is there much risk of overdoing it on a global level?
So we actually, my colleagues and I, a number of my FOMC colleagues and I just got back from one of our frequent trips to Basel, Switzerland, to meet with other senior central bank officials from around the world. We are in pretty regular contact, and we exchange. Of course, we all serve a domestic mandate, domestic objectives. In our case, the dual mandate, maximum preliminary.
근데 생각하면 할수록 어렵다.
We regularly discuss what we're seeing in terms of our own economy.
생각하면 할수록 어이가 없어.
It's a very ongoing, constant kind of.
아니 왜 이 800불짜리를 78불 먹고 나왔을까? 아, 진짜 짜증나네. 손절 10불짜리 왜 300불 나갔을까? 아 진짜 생각할수록 어이없네.
Taking place in major economies that can have an effect on the U.S. economy. That is very much baked into our own forecast and our own understanding of the U.S. economy as best we can. It won't be perfect. So, I don't see it. It's hard to talk about collaboration.
아 눌러주면 롱 탈게.
Very different levels of interest rates. If you remember, there were coordinated cuts and raises and things like that at various times. But really, we're in very different situations. But I will tell you that our contact is more or less ongoing, and it's not coordination, but there's a lot of information sharing, and we all, I think, are informed by what other important economies that are important to the United States are doing.
손을 왜 이렇게 많이 들어?
Craig Torres from Bloomberg. Chair Powell, you talked about some ways the higher interest rates are affecting the economy, but we've also seen a resilient labor market with durable consumption, strong corporate profits. And I'm wondering what your story is on the resilience of the economy. After all, you and your colleagues said, well, we started tightening in March when we were talking about interest rates in the future, and indeed, Treasury rates moved up, so we should have had a lot of tightening taking effect.
You're right, of course. The labor market in particular has been very strong, but there are the sectors of the economy that are most interest rate sensitive are certainly showing the effects of our tightening. And of course, the obvious example is housing, where you see declining activity and of all different kinds, and housing price increases moving down. So we're having an effect on interest-sensitive spending. I think through exchange rates, we're having an effect on exports and imports. I think so. All of that's happening. But you're right. And we've said this. This is a strong, robust economy. People have savings on their balance sheet from the period when they couldn't spend and where they were getting government transfers. There's still very significant savings out there, although not as much at the lower end of the income spectrum, but still some savings out there to support growth. The states are very flush with cash, so there's good reason to think that this will continue to be a reasonably strong economy. Now the data sort of are showing that growth is going to be below trend this year. We think of trend as being about 1%
좀 눌러줘봐.
in that range. We're forecasting growth well below that, and most forecasters are. But you're right. There's certainly a possibility that growth can be stronger than that, and that's a good thing because that means the economy will be more resistant to a significant downturn. But of course we are focused on the thing I started with, which is getting inflation back down to 2%. We can't fail to do that. If we were to fail to do that, that would be the thing that would be most painful for the people that we serve. So for now, that has to be our overarching focus. And you see that, I think, in the SEP, in the levels of rates that we'll be moving to reasonably quickly, assuming things turn out roughly in line with the SEP. So that's how we think about it.
Thank you, Mr. Chairman. In a world of euphemisms that we live in here with below-trend growth and modest increase in unemployment, I'm wondering if I could ask you a couple of direct questions for the American people. Do the odds now favor, given where you are and where you're going with interest rates, favor a recession? 4.4% unemployment is about 1.3 million jobs. Is that acceptable job loss?
오늘 처음 비트겟으로 옮겼는데 주문 걸어놓은 상태에서 클로즈를 눌렀는데 익절이 안 나가서 다 뱉어내요. 뱉었다.
How will you know, or will you know, if you've gone too far?
So I don't.
너무 아깝다.
I don't know what the odds are. I think that there's a very high likelihood that we'll have a period of what I've mentioned is below trend growth, by which I mean much lower growth, and we're seeing that now. So the median forecast, I think, this year for among my colleagues and me was 0.2% growth. So that's very slow growth, and then below trend next year. I think the median was 1.2, also well below. So that's a slower. That's a very slow level of growth, and it could give rise to increases in unemployment. But I think that is something that we think we need to have, and we think we need to have softer labor market conditions as well. We're never going to say that there are too many people working, but the real point is this: inflation. What we hear from people when we meet with them is that they really are suffering from inflation, and if we want to set ourselves up really light the way to another period of a very strong labor market, we have got to get inflation behind us. I wish there were a painless way to do that. There isn't. So what we need to do is get rates up to the point where we're putting meaningful downward pressure on inflation, and that's what we're doing. And we certainly don't hope. We certainly haven't given up the idea that we can have a relatively modest increase in unemployment. Nonetheless, we need to complete this task. It's hard to hypothetically deal with that question. I mean, our really tight focus now continues to be ongoing rate increases to get the policy rate up where it needs to be. And as I said, you can look at this SEP as today's estimate of where we think those rates would be. Of course, they will evolve over time.
I wanted to follow up with what you just mentioned about the labor market. You've said several times that to have the labor market we want, we need price stability. And you've suggested maybe there isn't a trade-off in the long run. But in the short run, there is a lot of concern, as people have been expressing here, about higher unemployment as a result of these rate hikes, or as a result of rate hikes. So can you explain, though, what about high inflation now threatens the job market? And you seem to suggest that inflation, high inflation will eventually lead to a weaker job market. So can you spell that out a little more for the general public and how that will work?
So for starters, people are seeing their wage increases, their wage increases eaten up by inflation. So if your family is one where you spend most of your paycheck, every paycheck cycle, on gas, food, transportation, clothing, basics of life, and prices go up the way they've been going up, you're in trouble right away. You don't have a cushion, and this is very painful for people at the lower end of the income and wealth spectrum. So that's what we're hearing from people is, very much that inflation is really hurting. So how do we get rid of inflation? And as I mentioned, it would be nice if there were, a way to just wish it away, but there isn't. We have to get supply and demand back into alignment. And the way we do that is by slowing the economy. Hopefully, we do that by slowing the economy, and we see some softening in labor market conditions, and we see a big contribution from supply side, improvements and things like that. But none of that is guaranteed. In any case, our job is to deliver price stability, and I think you can think of price stability as an asset that just delivers large benefits to society over a long period of time. We really saw that for a long time. The United States had 2% inflation, didn't move around much, and that was enormously beneficial to the public that we serve. And we have to get back to that and keep it for another long period of time. To pull back from the task of doing that is you're just
할 것 같은데, 어울릴 것 같은데.
The record shows that if you postpone that, the delay is only likely to lead to more pain. So, I think we're moving to do what we need to do and do our jobs, and that's what you see us doing.
Thank you for taking the question, Mr. Chairman. Edward Lawrence from Fox Business. So you had said that Americans and businesses need to feel some economic pain as we go forward. How long from here should Americans be prepared for that economic pain?
How long? I mean, it really depends on how long it takes for wages and more than that, prices to come down, for inflation to come down. And what you see in our projections today is that inflation moves down, significantly over the course of next year, and then more the next year after that. And I think once you're on that path,
무빙.
that's a good thing. And
끝나고 나면 오르려나?
they'll feel lower inflation, they'll feel the economy's improving, and also if our
이런 거 알트랑 같이 잡고 같이 올라가야 되는데.
you'll see that that the costs in
스트레스.
employment they're meaningful, and they're certainly very meaningful to the people who lose their jobs, and we talk about that in our meetings quite a lot. But at the same time, we'd be setting the economy up for another long period. This era has been noted for very long expansions. We've had 3 of the 4 longest in measured history since we got inflation under control, and that's not an accident. So when inflation is low and stable, you can have these 9, 10, 11, 10-year expansions, and you can see what we saw in 2018, 19, and 20, which was very low unemployment, the biggest wage gains going to people at the low end of the spectrum, the smallest racial gaps that we've seen since we started keeping track of that. So we want to get back to that, but to get there, we're going to have to get supply and demand back in alignment, and that's going to take tight monetary policy for a period of time.
What is that economic pain in your mind? Is it job losses? Is it higher interest rates on credit cards? What is that economic pain?
So it's all of those things. Higher interest rates, slower growth, and a softening labor market are all painful for the public that we serve. But they're not as painful as failing to restore price stability and then having to come back and do it, down the road again, and doing it at a time when actually now people have really come to expect, high inflation. If
1대1인데
concept of high inflation becomes entrenched in people's economic thinking about their decisions, then sort of getting back to price stability, the cost of getting back to price stability just rises. And so we want to avoid that. We want to act aggressively now and get this job done and keep at it until
1.13? 안돼! 안돼!
Nicole Goodkind, CNN Business. Existing home sales have fallen for 7 months straight. Mortgage rates are at their highest level since 2008. Yet mortgage demand increased this week, and housing prices are still elevated. Now, at the end of your June press conference, you mentioned plans to reset the housing market. I was wondering if you could elaborate on what you mean when you say reset, and what you think it will take.
그건 아닌 것 같은데? 수령 같기도 하고.
So when I say reset, I'm not looking at a particular specific, set of data or anything. What I'm really saying is that we've had a time of a red hot housing market all over the country where, famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing.
맞아.
At an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues though with the housing market, as you know.
모르겠다.
It's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots.
바로 터지겠는데?
And materials and things like that. But from a sort of business cycle standpoint, this difficult correction should put the housing market back into better balance.
안돼!
Shelter made up such a large part of this
안해.
CPI report that we
아 스트레스 받아.
Do you think that there is a lag and that we will see that come down in the coming months, or do you think that there's still this imbalance that needs to be addressed?
No, I think that shelter inflation is going to remain high for some time. We're looking for it to come down, but it's not exactly clear when that will happen. So it may take some time. So I think hope for the best, plan for the worst. So I think on shelter inflation, you just got to assume that it's going to remain pretty high for a while.
마지막 질문인가 봐.
Young with Market News. You've talked about the need to get real rates into positive territory, and you said earlier that policy is just moving into that territory now. So I'm curious, how restricted
마지막 질문이래요.
rates at 4.5% expected is that expected to be next year? How restricted?
So I think if you look, when we get to, let's assume we do get to that level, which I think is likely.
인플레가 일시적이라는 말은 이제
Adjust that for some forward measure, looking measure of
말을 바꿨네요.
Of inflation, and that could be you pick your measure. It could be, there are all kinds of different things you can pick and you get. But what you'll get is a positive number. In all cases, you will get forward inflation expectations in the short term. I think that are going to be, assuming that we're doing our jobs appropriately, that will be significant. So you'll have a positive federal funds rate at that point, which could be 1% or so. But I mean, I don't know exactly what it would be, but it would be significantly positive when we get to that level. And let me say, we've written down what we think is a plausible path for the federal funds rate. The path that we actually execute will be enough. It will be enough to restore price stability. So this is something that, as you can see, they've moved up, and we're going to continue to watch incoming data and the evolving outlook and ask ourselves whether our policy is in the right place as we go. Thank you very much.
이렇게 끝나면 오를 것 같은데?
자, 여러분 정리 한번 해드리겠습니다. 이번에 그래도 생각보다 부동산 쪽 빼고는 볼만했는데 이거 뭔가요? 이거는
아, 이거 눌림을 잡자. 아, 좀만 기다릴 거. 아까 치지 말고. 아, 여기서 수렴을 봐가지고 씨. 그냥 ABC 기다릴 걸. 됐다. 일단 여러분들 고생 많으셨고, 로스 심하게 터지신 분들 많은데 그것도 너무 안타깝고, 내일 좋은 자리에서도 우리 매매해 보도록 하고, 잡시다. 여러분들 매매 그만하고 주무세요. 하고 우리 내일 저녁에 라이브 때 뵙도록 하겠습니다. 아, 다들 파이팅입니다. 얼른 주무세요. 놀림에 들어가시고요. 네, 들어가려고요. 올라갈 것 같습니다. 한 2800까지 올라가지 않을까 싶습니다. 다들 굿밤 되시고요. 내일 봐요. 아, 오늘 이따 봅시다.